I was trying to make sense of all this in the context of like, why isn't everybody going insane over I think of it as the majestic stature of what's happening.
Trading anything on leverage. And then you could say prediction markets. So being able to bet on anything. Those are both speculation-based use cases.
You got a bit of control, because if it's like your most asymmetric bet, like the Christoph I know will be 100% all in this alone, nothing else. So at least you got some diversification. Well played.
For an advertising-free version of this show, check out wallstreetwildlife.com.
Welcome to the Deep Investing Jungle with your hosts Luke the Badger Hallard and Christoph the Monkey Piekarski. This week, we're back for round 2 with Daniel Shapiro. Daniel's a research analyst at Blockworks Research, and he specializes in cryptocurrency market trends, blockchain technology, and DeFi, decentralized finance. Daniel, we were just checking the diary. It was literally a year to the day today when you last connected with Christoph and I, so you could teach us all about Chainlink. And I subsequently bought some Link tokens. I know a ton of our Patreons are really interested in this space. So this week, we've got you back yet again to demystify the potential and the challenges of Chainlink and tell us more about the evolving world of blockchain technology. Welcome to the pod.
Awesome. Thanks for having me, guys. Happy to be back.
Sweet. Daniel, so I'm the resident in our Wall Street Wildlife community. I'm the resident Chainlink nut. And often, I think I've converted maybe a few of our members to the madness. But it's still mostly me with what feels like a whole bunch of insanity in my head. You know, I'm trying to match what I think is happening versus, what we're seeing in reality and how it's unfolding. So I want to step back. I couldn't wait to start this conversation with you because I don't know what I don't know. Let's start on the high level. From my understanding, especially over the last couple of months, say, all kinds of legislature is in the works. BlackRock and the U.S. government and everybody is starting to talk about global finance moving on chain. It seems like a big effing deal. But any normal person, I think, when they hear the word DeFi, my legitimate guess is they have no idea what that means or why that's important or why any normal bank, would want anything to do with this kind of thing, with DeFi. Can you give us the sort of big picture of what is the value proposition of DeFi?
Absolutely. So I think there's kind of two angles here. And I'll start with the first one, which is, I'd say, kind of the more historical value proposition of it, which is the disintermediation of these kind of intermediaries that might, these middlemen, rent seekers that extract value from end users in the financial system. And by creating these open internet protocols effectively, where users can interact with various financial primitives that are traditionally only accessible to those with banking systems, they can get access, right, to these tools to better manage their wealth, their capital, and ultimately their lives, right? And kind of the ability to do that was the ability to secure these people's value simply over the internet was enabled by virtue of these being decentralized, right, and these operating under consensus mechanisms. Where now, right, I can make an agreement with you over the internet, to exchange some value or to lend some of my capital to capture yield. And right, I'm not just throwing my money into the ether and it's getting lost to some scammer, right? And so really only 2 billion people around, ish in the world have access to bank accounts and traditional financial services, but there's over, I think, around 8 billion people. So, and it's a lot easier to get a cell phone, right, and access the internet than to live in some geography where there is a government with a political system and a judicial system that can support the existence of companies, let alone financial markets. And I think around 4.5 billion people have access to cell phones, right? So I think that, is historically kind of the first angle of the value prop of DeFi. What we're seeing in more, I guess, traditional westernized countries, right, like the US, where we have banking systems, the value prop changes, right? Because we don't need permissionless access to a new financial system, right? Like we have that, right? So I think the next big shift for DeFi is around tokenization, right? And the value proposition there is effectively we are upgrading legacy infrastructure that is slow, expensive, and kind of opaque. And what DeFi offers, right, not just to like the retail participant, market participant in the US, but to these massive institutions, Wall Street per se, is things like instant atomic settlement, T+0 settlement. If there's hundreds of billions of dollars or low trillions, single digit trillions of dollars of US treasuries that are locked for a day while they're transferring, that's a day where they could be earning 4% yield in the repo facility, right? And that's billions of dollars a year in just revenue right there from instant settlement, right? So that's efficiency increase, right? Another thing could be, right, interoperability. You could have previously entities that couldn't transact, or maybe they were different lines of business, and even in single banks, like a BNY Mellon, right? Like their bank is so large, and this is actually something that they've spoken about with Chainlink, like different divisions within their bank and different services don't actually have the ability to interact with each other directly, right? So I think interoperability, kind of the digitization there, you can kind of have companies have full parametric overview and control of all their assets. Things can talk to each other instantly. I think that you'll see a lot of capital efficiency improvements from there. And then kind of the last big, I guess, value prop of tokenization is that you can take previously illiquid markets and you can now actually create services or make those investable and sell them to an increased number of users, right? So something like art, fine art, you can make it easier to invest in real estate. We're starting to see now people are actually tokenizing AI data center cash flows. So I think that there's a lot of new interesting financial products that are going to come out of DeFi and tokenization. So I think those are kind of the two pillars, and I think that that's why it's kind of the hot thing right now.
Awesome. So cool. So let me just try to sort of summarize and brief part of what you said, and then I have a follow-up to run by you. So in one sense, you said it's basically instant. When you do something with DeFi, you don't have to wait, say, several days or over the weekend because banks are closed, right? Saves immense amount of money. Two, everybody with an internet or cell phone has access to it. Banks not needed, right? So kind of globalizes the financial world. Three, there's no middleman. You're not dealing with intermediaries, right? You're doing it yourself, right? As long as you could handle the keys and stuff, right? And not fuck it up, pardon my language. And the markets are always open, right? Like, so it's sort of bringing this world like that, yeah, if you need money, you'll get money, or whatever the deal is, right? So this thing of being instantaneous. My follow-up to you is, I don't know if this is getting too far ahead of ourselves, but in our investing world, I recently started following a company called GNS, Genius Group, which is a kind of tiny little market cap that's like a Bitcoin treasury kind of play. It's a weird company, but the reason I was interested in it because it's fighting market corruption. It's been, it alleges, and I think truthfully, it alleges that its value was destroyed by market manipulation in which the market makers basically created shares out of thin air in order to drive down the price because they were short a bunch of shares. I mean, I call it like outright corruption, making things out of thin air and then doing whatever you want behind who knows what dark doors. Would bringing, say, equities and growth in the stock market onto DeFi or blockchain help fix problems like that?
Yeah, absolutely. I think that it definitely fixes the to some degree, right? These systems are like traditional systems are more opaque. Blockchain ledgers are transparent. Now a prerequisite that will need to exist for these to be adopted at scale is actually privacy, because right, no one wants to live stream their bank account and all their transactions, especially right if you're a company that's working on the behalf of people that are trusting you with their money and their privacy. They're not going to do that unless there's a basic level of privacy. But what a blockchain does enable is effectively if something illegal did happen, then blockchains can allow selective investigation of transactions, right? So like one kind of like the most popular example of this is a technology called zero knowledge proofs, and these allow you to verify some sort of information or some sort of transaction without actually revealing the underlying contents of the data, right? And so with these types of systems, you can guarantee people's individual privacy, right? And that like they're what they're doing is not just getting broadcast to the world to see. At the same time, if there is some type of fraud, then the government can come in and those, the transactions that play there, because right, everything is recorded permanently on the ledger. So it can't be tampered with, it can't be manipulated. And so if something illegal happened, right, like that, like some type of fraud, then yeah, 100% that can be found. And right, those set of transactions can be identified and then tied back to the individuals that.
And that was one of the original use cases, right, of blockchain, that kind of, you can't screw with it. But right. So, I mean, I don't think that's mind blowing to anyone. But it is a kind of major fundamental use case, right? Like basic 101, like
100%. It's kind of built into the technology.
Awesome. Okay. So that's kind of the big value proposition. And unless, Luke, I don't know how this all sounds to you, but it makes intuitive sense to me that every last financial institution in the world would want these qualities because it's a major upgrade, both for all the reasons we discussed. Do you like you sort of being our resident guinea pig, does that make sense to you, or do you have some pushback against this value proposition, why it's so obvious?
I think it's like another channel, another way to transact, another way to do stuff alongside what you have today. So it kind of resonates with me, but I'm in the middle, right? I'm neither a crypto, I'm a partially crypto skeptic and I'm partially like on board. I don't think like traditional ways of transacting and things like Swift are going to go away anytime in the next like 50 years. But if they get augmented with other technologies, then yeah, I can see that.
Yeah, well, that's where Chainlink's going to come in. But I'm sure Daniel will speak to that in a bit. Okay, so I guess the next question, Daniel, I want you to have a little bit of fun, though if you could keep it sort of, translate the jargon for our listeners as best you can. It's been a year since we last talked. And from my perspective, what Chainlink announced, especially over the last, 3 months, has been, to me, like kind of mind-boggling. And would you mind telling us what you heard or what you saw happen both in Frankfurt at Sibos and at SmartCon, and which of the things that they talked about moved the needle for you personally in your understanding of Chainlink and what they're now offering?
Absolutely. So it's it's another year, a lot of progress. price relatively flat, but I'm sure we'll get into that later. But I think something that Chainlink announced last year, and I think we might have brought it up here, is what they're calling their Chainlink runtime environment. And effectively, blockchains are just the ledger component of some type of, of what we are talking about when we talk about DeFi, right? There are other components of DeFi that need to be decentralized, that are kind of critical components to any DeFi based application, protocol, tokenization project, etc. Right? These things need to be updated with real time price feeds. A lot of the time, they need external triggers to actually tell them that something happened in the outside world. Right? Blockchains are, right, by design, kind of these tamper-proof closed systems, and for them to interact with external systems, right, they need to be told what happened, right? But kind of that oracle, right, that mechanism that tells them what happened or tells them about some data, that needs to be decentralized as well, right? And so whether it's Chainlink's cross-chain interoperability protocol, which allows blockchain smart contracts to talk to other systems, their data feeds, right, feeds data into these things so that lending markets can price assets, or perpetual futures exchanges can price assets. Whether it's something like enabling privacy and confidentiality, right? Chainlink actually announced this at SmartCon, their confidential compute mechanism, right? So there's all these tangential services that are necessary to interact with financial markets, and obviously, all these systems currently run on the Swift messaging system. What they announced at Sibos is the further continuation of their partnership, and effectively what I view as Swift's attempt to modernize, right? And instead of reinventing their whole base infrastructure and messaging system, they're effectively just layering Chainlink on top, so that Swift messages can now trigger any type of interaction on any Chainlink enabled CCIP blockchain, right? Which I think it's 50, 70 chains now, something like that, or other external systems, right? Like a like a JP Morgan Connexus stablecoin chain, or a Tempo,
right? DTCC, as announced
Yeah.
today or 2 days
Yep.
ago. Right?
DTC, right? They announced that there are big tokenization things happening in the second half of 2026. And even going back to Chainlink's conference, their very first in-person SmartCon in 2021, Stephen Prosperi, who is the head of tokenization at the DTCC, was one of the only TradFi people speaking there. So Chainlink, we know Chainlink's been working with the DTCC for 4 years now, at least. And it seems like, they are launching something next year, which, it could be, the Genius Act now passed. Now we're kind of waiting on the Clarity Act. And I don't know if you want to talk about this now or later, but, it seems like the regulation is now passing that would enable a lot of this to move forward. So it has been, a lot of talk, a lot of building, a lot of announcements, and I guess not much else following that up. But it would seem that if we are, if this thesis is correct and we're looking back on this in 5 years, in 10 years, it seems like we're at or very close to the point, I guess, to the tipping, right? Which is exciting as an investor, because your thesis is either going to be validated or invalidated, and both are useful, right? But yeah, I'd say the biggest things is continued Swift partnership, kind of announcements and more color over that, and then the launch of CRE, which is really, I think it's effectively Chainlink creating a single cloud platform for people to interact with all these services in a very easy, composable, and repeatable way. So it's it's not that it's in itself a new offering. yeah, in itself, it's not like a new type of service they're providing, but they're effectively enabling developers to interact with all their services in a very easy, streamlined way. Something like an AWS makes it easy for developers to, to build web applications from a single environment, right? So I think that's your, GCP, Google Cloud services, right? So I think that's kind of what is coming together, and it seems to be coming together right when regulation is pushing through. So was that planned? Was that timing?
Yeah, right. So I'm glad you mentioned Daniel, AWS, because to segue to the next bit here, I was tinkering, I was trying to make sense of all this in the context of like, why isn't everybody going insane over the I think of it as the majestic stature of what's happening. Like the paradigm shift is, to me, having followed this for so many years, like right in front of my eyes. So it feels like a huge deal. Why, like I was trying to make sense of it basically. And on my own, I kind of thought back to myself as an investor back in, I don't know, approximately 97, 98, 99, watching the Amazon story unfold. And I remember for many, many, many years, all the analysts, all the critics were saying this company is dead, can't make a profit. It's blah, blah, blah. But that kind of critique lasted for a long time. It was not a one and done, like, oh, they're genius, right? It's gonna. So there's that bit, right? And I'm like, oh yeah, this sounds a little bit familiar, right? Where with the Chainlink story, with where we are, like it's right in front of you, but nobody seems to be, well, other than the wholly converted. But then, to your point, Amazon's sort of magic switch was something that most people don't even know about. AWS, like building the thing that helped run the internet. Not the books, not the distribution that kind of came later, but the AWS sort of behind the scenes thing was their magic formula to immense cash flows and, able to then cycle it back into the business and so forth. So I was thinking like, holy cow, is Chainlink the next Amazon? And then the slide deck comes out, Chainlink's own slide deck, where they did one better. They had a slide that shows Chainlink, the foundation of on-chain finance, with stack, and on top you see Microsoft Windows and how that revolutionized or brought about personal computing. AWS, how that led to cloud computing. NVIDIA, leading to artificial intelligence. And the last brick, Chainlink, bringing about on-chain finance. I saw this and it clicked for me, as though I'm back in, 97, about to invest in Amazon. I believe Luke is much more skeptical when I said, holy cow, like this is not a small thing, right? If Chainlink is, at least per the slide, hanging out the big boys. Do you think, Daniel, that this kind of comparison has any amount of legitimacy that could be sort of that big as a Microsoft, as an Amazon, as an NVIDIA?
I mean, I don't know if as big as an NVIDIA, right? But I do think it's an apt comparison, right? And I think, in terms of why people you could say aren't excited, it's because price action leads narrative, price action leads everything, right? And price has been flat for effectively 2 years now. So I think that is, Chainlink's been talking about Swift since 2017, right? And so I think people in crypto are, I guess, they want to see revenues, buybacks, token buybacks, fee generation, right? They want to see that all directly. So I think that, just as a quick aside, I think that is the reason why, I guess people might not, why all the announcements might not have like triggered that much reaction. In terms of whether I think that this is legit, I don't feel more confident than I do today, right? Which is weird to say because price has effectively diverged, more negatively to this extent over this time horizon. But it's just funny because, and I don't want to get too technical, but like a lot of the stuff that I've written about over the past 3 years is starting to come true with respect to a lot of the fundamental infrastructure in the space that people thought was very valuable, like in Ethereum or Solana. Right now, the narrative is shifting that these things are completely overvalued, don't generate enough cash flows, have PS price sales ratios in the thousands, are losing market share, and kind of the future is moving, and we're seeing in real time, right? Like the most successful applications in the crypto space, like a Hyperliquid, are literally applications that just built their own infrastructure, right? And so everything that I thought from a fundamental perspective of why Chainlink is valuable and that they're effectively creating modular, generalized blockchains for various types of compute and data that are fundamental inputs, like what they're building, I think it couldn't be more aligned with where the narrative around infrastructure is heading, right? And this once again, I don't want to get too deep, but as a crypto research analyst, like I think that, I don't want to just sit here and say like, oh yeah, Chainlink's the next Google, it's the next AWS, right? Like they're, literally the smartest people in crypto right now are having like the biggest narrative discussion right now is around layer one blockchains, these generalized layer one blockchains, and how they're really overvalued and how there's not that much innovation occurring on them anymore. Meanwhile, you have Chainlink, which is building this completely differentiated product of effectively elastic, modular, what they call DONs, right? Decentralized Oracle Network. But if you think about it, these are just mini blockchains that generate consensus on anything. So like a DON could run a blockchain, right? You could run a consensus protocol inside of a Chainlink DON, right? Kind of like a square is a rectangle, but a rectangle is not a square, right? Chainlink has built the most fundamental, I think their understanding of where everything is going, right? Not only do they have the strongest partnerships with Swift, with all of TradFi, but what they are building for them to build is they're giving them the tools for them to create effectively application specific, to create applications, and then the underlying infrastructure is completely abstracted for them, right? And so, if you go just look up Hyperliquid, the coin is called Hype. They built a futures exchange, and then they built it on their own chain with 6 validators. They didn't build it on Ethereum. They didn't build it on Solana. No one really cares about decentralization. They care about sufficient decentralization. And as Hyperliquid is scaled, they've increased the number of validators. So I think what Chainlink is building is they're effectively, I don't think they're right. I think they're going to completely replace, not completely replace, right? But they're effectively giving the tools to all these financial institutions that have the distribution, that have the trillions to, quadrillions of dollars, right? They're giving these people the tools, people that have the assets, that have the distributions, that have the ability to generate cash flows, that have modes that can sell products with high margins. They're giving them the ability to effectively tokenize, right? To create decentralized forms of their applications, get all these efficiency improvements, and effectively spin it up in a couple months using Chainlink infrastructure. It's not going to be built on Solana. It's not going to be built on Ethereum. They're not going to create their own chain. It's going to be these effectively hyper-specific, applicate. And the AWS equivalent would be if I want to go make an app, right? Okay, I'm not going to go build my own database. I'm going to use S3 or DynamoDB, right? If I need compute instances, I'm going to go launch various EC2 instances for compute. They'd have hosted databases as well, right? Auth services, API services, they abstract all that away so that the developer can easily just go build the thing that they want to build.
Right. And Daniel, right? So the point, right? The point of what you're saying, if I could kind of condense it, is, Luke, if like to bring you back into this conversation, to me, those kinds of that value, where that allows everybody else to do what they need to do, is measured in the billions and billions of dollars, like massive. And I think what I'm curious about your take about this is, from the investor standpoint, if we look at something like Microsoft chart, just the stock chart, like, I don't know exactly, but the line was flat for like many, many, many years as the software, proliferated and the personal computer industry started to grow and grow. And then there's this inflection point that's just, rocket straight up now at $1 trillion. Ask any, investor, I guess, to go back to that time machine during that origin story. And they probably would sit here and not say, like, this is going to be worth $1 trillion. Amazon, Microsoft, or NVIDIA, right? And the NVIDIA inflection point only happened a couple of years ago. So my question to you, Luke, is if what Daniel is saying and what I'm sort of preaching about is, call it technologically true, and now we're seeing real world adoption by the biggest financial institutions of these tools, is it preposterous to think that, we're just early and the price is, dog shit, but that's been true for these other 3 examples? Why would this be different?
So look, we've got our expert guest on the show, Christoph, giving us a really sensible, grounded answer. And you keep trying to take us into this like hyperbole, like fantasy land. Okay, look, let's take a really optimistic view that Chainlink comes in and is able to like entirely disintermediate Swift and maybe do a whole bunch of other stuff too. And can you equate that with like a Microsoft? And I get the purpose of your question, because it's like, we didn't know back before AWS existed and when Amazon was like a bookseller, none of us had really any idea about the potential of these things and how they really redefined markets. Is Chainlink one of those things? I don't know. Like, I see that maybe it'll become something totally different in the future. But if we take it for what it is, which is like, if you buy the argument, like a better way of doing things that we do today, an enabler, efficiency, faster, cheaper. Okay, so let's say it disintermediates Swift, right? So you can't really put a value on Swift, but it's like a collective. And I think the banks kick in about $1 billion a year to contribute to the funding of Swift. So maybe, some or all of that goes to like Chainlink instead. So you got like $1 billion in kind of notional revenue. And then maybe, I don't know, maybe it disintermediates like a lot of the stuff that Wise is doing, like around money transfer. I always get the question as like a Wise guy. So you got like maybe another like $10 billion in market cap there. Is it like $1 trillion, a $5 trillion company? I don't know. It would have to be something materially different for that to be the case.
What do you think, Daniel? Luke's basically telling us the scale is way off. Maybe the analogy is right, but the scale is way off. And just real quick, I don't think from the investment standpoint, Chainlink wouldn't need to get to $1 trillion. Just getting to, say, 250 billion would be plenty for our returns. But Daniel, what do you think about basically the critique that Chainlink is just nowhere near, as the vision is not big enough to justify comparing it with Microsoft, Amazon, or NVIDIA?
I mean, I think it's tough to make those comparisons, right? Like it's, I don't know. I mean, like who knew that NVIDIA making like gaming chips was going to be the foundation for AI, right? It's like, I think it's impossible to know. And to be quite frank too, like, I don't think as an investor, it's important to even think about how big it could be, right? Like, I think ultimately it's about, I mean, I'm sure that there were people sitting there going, oh, Microsoft, this is so valuable. Like even when it was going sideways for 8 years, or AWS for 8 years, right? And they predicted that what they were building was going to be useful and it was going to explode, right? But like, they were wrong for 8 years. And so like, to be frank, like I've been wrong about Chainlink for however long now, since the bear market, since the top in 2021. And maybe I am right? But I think, I think the important thing is if right, like these catalysts do start occurring, then price action will pick up. And, like you ride that as high as, like your targets are, and based on your own personal, portfolio and goals and life goals and risk tolerance, like you take profits where you
Right.
think you can take profits, right? Like debating whether it's going to be $100 billion company or $1 trillion. I mean, to give some comps, right? Like Ethereum made it up to 580 billion market cap, a couple months ago, at like a 3,000 price sales ratio. So who's to say that Chainlink off of just narrative and hype couldn't go up to like $1 trillion and then correct down to like 100 or 200 billion? Like I don't know.
Daniel, let me rephrase then the question. Forget the valuation stuff. I think that's actually taking us off the wrong path. Let me put it this way. By way of analogy, inventing the personal computer for Microsoft and then having computers basically run modern society, I could see that as a huge, big deal and why that would be worth a lot. Amazon, what they were able to build deceptively, I could see why that's a huge deal. Basically, e-commerce, inventing the whole e-commerce thing. NVIDIA, obviously, we know why that's a big deal. When I look at the tools that Chainlink is starting to offer, what I think of as the entire global financial world, my question is that, if executed properly, a big effing deal? Or is it just not going to be big enough?
No, I think it's big because it's more than just finance too, right? Because what they're building is generalized consensus computers. And so, like an example that they're effectively head of technology, Ari Jules, talked about at SmartCon is what he's calling protected prof. So effectively data pipelines for AI. So the biggest problem right now in AI is effectively models are made through processes of composed of pre-training and post-training, whether it's fine-tuning or reinforcement. During the pre-training stage, you effectively throw as much data at the model as you physically can. The thing is public web data is effectively exhausted, right? So it's, however many 6 trillion, 60 trillion, tokens worth of data. These companies have scraped every bit of data off the internet that exists. Private companies, though, right, in you could say the deep web or in private parts of the internet, whether it sits in companies or with individuals, it's estimated to have 2 orders of magnitude, so 100 times or more data than exists on the public web. That data would be hyper valuable for AI companies for training AI models. The problem is that data is private, right? And so there's various technologies where you could train on encrypted data. One's FHE, fully homomorphic encryption, and others MCP, or MPC, multi-party compute. Another is using something called trusted execution environments, which that's kind of Ari and where Chainlink acquired Town Crier, which is a SGX Intel based trusted execution environment, Oracle, back in like 2018, right? And so kind of that whole development, it turned into something called Deco, and now they're calling it confidential compute. What you can do with confidential compute, which is a combination of trusted execution environments and zero knowledge proofs, is you could do something like encrypted AI training pipelines. And so to me, the value proposition of consensus computing extends beyond the financial system. Now, I don't know what the margins are going to be. I don't know what the take rates are going to be. I don't know what type of moat they're going to have. But yeah, could building effectively the platform for generalized consensus computing, is that going to be highly valuable in the age of AI, where you have agents that need to know something for sure about the outside world for them to submit an action? Well, how do they know something happened for sure? Well, you have an Oracle network that's using some form of consensus to determine if something happened. And so, right, obviously finance is the first use case here, But I think that as we move towards a world with, cyber physical systems, robots interacting with our daily lives, how does AWS robot, if they're dropping a packet, or if an AWS drone is dropping off a package to a robot at someone's, house, or how do they know that happened? Whose sensor is AWS's sensor that tells them that the package got delivered? Is it your personal sensor that's run by Google that says that the package got delivered? Like, these are all AIs. They don't have the same biological systems we do. They live in an abstraction of our physical world where they only receive information digitally. And so I think, right, like, could Chainlink eventually get into, could Oracle networks be used for stuff like that as well? Like, yeah. And if that's true, then could the market cap be 5 trillion or 10 trillion? Like, sure. Could it hit 500 billion or 1 trillion just off of the finance stuff? Yes. And that's still like a 50x or 100x from where it is today. So, like, I mean, I think what they're building is very important. I don't know for sure, as no one does, but they are the largest company in crypto now. I think they have the best talent by far. And so, if one company in crypto is going to do it, then like I'd probably put my money on.
I suppose reflecting on like Christoph's analogy and your comment about them being the giant, like if they are setting the standard for establishing consensus and stuff like that, like if they're Microsoft with Windows, like is there an Apple out there who is the main competitor?
I mean, I'd say there isn't a single competitor, but their main competitor would be effectively the group of layer one blockchains, applications, companies that are launching chains, right? It would be to me a future where, I think Chainlink, for them to win, they need all of TradFi, right? They need to all start building on the Chainlink runtime environment. And the flow, right? Like the amount of transaction volume, activity, et cetera, that takes place there is just significantly greater than the amount of activity that happens in crypto land, right? Which we're like 1.5 trillion less now after this correction. And, in TradFi, it's over, it's hundreds of trillions, over 680 trillion of assets, right? So, it's okay. Chainlink plus Swift, like Chainlink, I don't think it's going to disintermediate Swift. Its goal is to actually, like, I guess build on top of Swift, right? The competition is, Hyperliquid as an exchange just keeps growing, and everyone just moves off of these external systems to these new systems directly, right? Stripe is launching a blockchain. They take payments, directly. Right, like maybe like a Solana, they had a ton of big announcements. Maybe people start, just building on them, and the single generalized kind of chain thesis actually is correct, and they start taking increasing amounts of market share, right? But I think where that argument falls apart slightly is that, there's only so much capital and assets in the world, and those assets exist within the companies that Chainlink is now working with, right? So, like, I don't think BlackRock, who manages more money, more capital than the entire crypto market cap, 10 times over, I don't think they're just going to go deposit their 10 trillion plus into Solana or Ethereum and make the Solana and Ethereum validator sets rich, right? To me, I think that they understand that the moat is in the capital itself. It's in the liquidity itself. And so the moat, so the move is for them to either build their own chain, build their own infrastructure, build their own apps, do their own tokenization things, right? Because they control the assets, and that's what the moat is here. All this other infrastructure, the cost to make it, it's all effectively, it's not approaching zero, but it's approaching some lower asymptotical. So to me, that's the competition, though, is that, my generation, the younger generations, right, they just start moving on to the purely decentralized infrastructure directly. And over time, as the wealth is transferred from the boomers to the next generation, you just see that the capital in the old system slowly compress. And right, I think that that's too slow compared to, like if I had to place a bet, I think that those people with all that capital, right, they're just gonna build their own, right, DeFi. They're just gonna build their own infrastructure on Chainlink first before that kind of shift, that full tectonic shift.
Right. And that's the important point, just to make this clear to everyone. If the banks, the BlackRocks, say, no, we're keeping all the stuff for ourselves because that makes the most sense, their only option really is Chainlink, which is sort of the agnostic platform, which helps them do whatever they want to do with their own stuff, as opposed to what Daniel was saying, bringing it to a commercial enterprise somewhere else. That's why Chainlink's sort of protocol-like nature, this sort of, I don't know, water-like internet protocol that is open to everybody without kind of saying, we're good. I think that analogy works, right? That they're saying, do it your way. We're just going to help you. And we're going to take a little bit of off the top for, using our tools, using our protocol. Daniel, I have a little bit of a pet theory. This is kind of now far out, a little further out in the loony bin that I want to run by you. And it's this sort of notion that, and forgive me if I don't mean to be insulting to anybody, but I always approached crypto as mostly a circus. Like that for whatever reason, the technology itself lent itself to a bunch of bad actors that kind of had a casino-like structure. And, with all the frauds and scams over the years and bad publicity, to say the least, right? Crypto now means mostly that kind of thing. In that Chainlink is now over here basically playing nice with non-crypto people that happen to control hundreds of trillions of dollars, and that they're sort of slowly saying we're not exactly crypto. Like the technology we're using is crypto, but really we're kind of more like we're doing something else. We're like developers or coders, and we're playing nice with the banks, and we're just gonna kind of bridge these two worlds together, but don't call us crypto. And my pet theory is that the crypto world sort of is seeing the writing on the wall, maybe, by what Chainlink is doing. And we're in this weird transition period that people don't know like what crypto is anymore, or why it's valuable, and that eventually the real fundamental use case that is Chainlink will basically be or turn into like the real uses that original crypto is for. I don't know if that question makes any sense or where you could.
Yeah, for sure. I mean, I don't know if it needs to be some conspiracy or anything at all. Like I mean, and this is, literally like the narrative that's been happening the past month has been this, and I'll frame it differently. But what the narrative is turning into, right? Like we're beyond the early innings, kind of the hype stage of crypto, right? Like it's not 2017 or 2018 where we're talking as if we're cypherpunks and we're gonna decentralize everything and we're gonna replace the US dollar with Bitcoin, and we're gonna solve global wars, and because the government can't just print money, and Ethereum's the global, it's this global computer, and we're gonna bank everyone. It's like, right, like no longer like effectively what this cycle was. So last cycle was that, I guess, the cycle of everyone realizing like, oh, well, like this stuff is real. Like DeFi came into existence in 20, and things got very overvalued, right, because of the hype, because of the COVID money printing, and then things came down. This last cycle, I think everyone kind of understood the game, and this cycle was really about like meme coins. Like that was essentially the cycle. I mean, there's been a few cool applications that are all based around speculation. So like I'd say like Hyperliquid around, trading anything on leverage. And then you could say prediction markets, so being able to bet on anything. Those are both speculation-based use cases, right? There's been, a couple cool apps, like I'd say like an Athena around like a tokenized delta neutral basis trade. I think that that's super cool, right? But like there really hasn't been that much innovation this cycle. And what I think the grifters, the extractors, right? I've seen the meme with like the roller coaster, right? Where each loop gets lower and lower and lower. Like with pump fund, like the people like this cycle is just a lot of extraction, and people they're just tired of it. They don't have any money left. Everyone knows that all these things are scams. Everything that launched this cycle, all the price discovery occurred in the private markets. So like the whole high FDV, low float meme where, something 10,000x's for the VC in the seed round and Series A round, and then they launch it $8 billion FDV, and the price immediately collapses 90%, right? So it's like the game, like the easy money game of people just selling narratives is over. So now it's show me the cash flows. What is your price to sales ratio? Because right, like the market has wised up, right? Like my generation, coming out of college, the whole stock. I mean, I was never into stocks. I was always a crypto guy, but the whole GME stuff, I don't know what's like the Reddit group called where like everyone trades in there.
Wall Street Bets.
Wall Street Bets, right? Like Robin, like this whole group of investors, at least from the crypto side, like they've wisened up, right? And so we're at this point now where it's like, okay, the easy money of just launching, the 87th layer 1 or the 42nd layer 2, like launching this infrastructure that no one's going to use and just saying it's faster, like that's over. I think that, right, like the market's realizing that. So I think Chainlink is positioned now for, let's say the Clearing Act does go through, and obviously like, they did their little Chainlink reserve thing, like, they're accumulating like $1 million a month or whatever. Like it's nothing. It's just a goodwill. It's just, I don't know if it's just marketing or whatever. Just look, like we make some money, like, right. But I mean, ultimately, Chainlink's position now where if some of this stuff happens, right, and they actually start posting their revenue, their cash flow, on chain publicly, then they have the ability to re-rate, right? Like Chainlink's something that could, it could 10x in quick order, if they go from what is effectively zero to, proving out their business model, right? And so I don't know if it's them trying to separate for crypto. Like what I will say, like they've been doing a ton recently. Like they're now the official Coinbase bridge. They're now operating on Solana. They have the official Solana Coinbase bridge. Like they're becoming the official bridging layer and kind of infrastructure layer of all these chains. A lot of them that ignored them at first. So they're still working on kind of becoming the standard within crypto. But I do think we're at a point now. I think we're at a point now in kind of this market cycle where it's like, yeah, I mean, why is Bitcoin diverging from gold? I mean, I think it's for me, it's very clear. I mean, I don't think it's well understood. I think there's a lot of theories around it, but people realized, oh, like if I take the energy of all my power contracts, if I take this energy and divert it to an AI data center instead of mining Bitcoin, I will make more money. So I am selling my Bitcoin to go do that. It's pretty simple to me. And so, I don't, if Bitcoin starts underperforming more moving forward because of that dynamic, like it's going to drag the entire market down with it. And the only thing that's going to outperform are things that are idiosyncratic and have their own cash flows. And what's interesting about Chainlink, right, is it's not just speculation based, right? It's not, I'm building a meme coin exchange, or I'm building a futures exchange to leverage trade, or, it's a fundamental efficiency improvement to the global financial system. Like this is like something real that's going to produce massive efficiency gains. So like it's differentiated in that sense. So the shift is happening. I think there's a lot of different reasons for it, but I think Chainlink is well positioned to capitalize here. But once again, if it's all real, if the partnership, if all these partnerships are actually manifesting in cash flows, and maybe that could lead us into the last phase of the maybe conversation or something. But I think it's simple. Like, I think you just wait, and I think it'll be obvious when it happens. So you don't need to take a position today, and join the crazy group of myself and everyone that's been saying this for years and nothing's happened, right? Maybe the smarter move was just to wait for this all to happen and then buy. But I do think that if it's going to happen, I think the next, year, 2 years, 3 years is the timeline that I guess Sergey's been talking about. So.
Yeah, Daniel, you led us nicely to this last bit of the hardest part about being an investor in Chainlink for me. Has to do with, in normal stock terms, trusting the management is like one of the core principles. But in the stock world, you also have, you have to file publicly, you have to disclose sales, there's all this regulation. And so you get to learn the easy or hard way whether management is trustworthy. You have documents. To your point about the Chainlink reserve, my take on that is it's actually, they're buying about $1,100,000 of Chainlink per week. So call it 4 million something per month, which in the big picture is nothing.
Is it per week, or is it? I think it's
per
a
week.
million.
It's per week.
It is.
Yeah,
that's not bad.
Yeah, so they're up to, since it started, they've now bought back over 1.1 million Chainlink out of a market cap of so 1/1000th of Chainlink is now in reserve. To me, the number is obviously tiny and relatively immaterial, but it's a signal, the only one I have so far, that the actors involved in this project, because they're working with the world's top financial institutions, they cannot afford to be any kind of con artist or meme flipper or, clown show at all. And this is the only signal that they could, in a sense, give right now that we're on the shareholder side and we're legit, and this ain't no rug pull thing.
And sorry to cut you off, but also what they're doing with their staking program, with their cubes, where you can allocate cubes towards these other projects that are part of the scale program. It's like a points program because they can't do anything token related, right? Because they're following the rule book by a T, right? Which is, they're probably being too conservative, but they're making sure that they're following everything, 100%.
Right. Yeah, exactly. Right. So the flip to that, Daniel, is, I guess I, as an investor, lean naturally towards risk on. And in this moment, Chainlink, I don't know, the main queasy feeling I have is literally acknowledging I have zero idea how much revenue they're actually bringing in. And that leads me to two questions. Why? Right? And the only quasi-optimistic view or answer to that is, because of the scope of what they're trying to do, that network building phase, they do not want it, like for strategic purposes, the way any utility and battery company don't reveal clients and backdoor talks, right? It's to your advantage, basically to Chainlink's advantage to interconnect, to insert themselves into every last piece they can, at which point it's too late for anybody to dominate, and revealing revenue flows and all that stuff would decrease their leverage negotiation position. But I have to trust that, which is upsetting as an investor. Does that jive with your understanding of like where we are right now?
Yeah. No, you're 100% correct. Like, from a game theoretic perspective, like, the longer you can remain in stealth mode, the larger a benefit is to you, right? And so you could say in traditional markets, capital formation, like, other companies would do this as well if they could, right? But they can't, because they legally can't do that. But for whatever reason, right, not for whatever reason, but because they are a crypto protocol, like, yeah, they can do this. And so, they're kind of still in stealth mode to some to some degree, right? And when the floodgates open, there won't be there won't be a single competitor. So I mean, it's frustrating, right? Because I mean, it depends. As an investor, you could say, oh, more time to accumulate, but you could say also, oh, I wanted price to go up more already. Okay, that's fair too. But yeah, I think from the team's perspective, if they can effectively, keep things private like they have, it from a game theory perspective, it gives them an advantage. And so, yeah, it is what it is, right? But so I think the move then is as a potential investor, it's, look, you got to size your position properly. And then the second thing is, yeah, I mean, once all this stuff, like if it is going to happen, it does start happening, like you're going to have time to buy in. Right. And so I think that, given those dynamics, right, I think the move is like, for this thing to start outperforming, for this thing to reach those goals, it's going to need to start outperforming first. Right. And so measuring how it's performing against the Ethereums, the Solanas, against Bitcoin, and, when it does start outperforming, then you can start to size in, more aggressively. But yeah, no, 100%. Like it, and like I've done the research, right? Like I've looked into, really the big thing is their scale program. So this is off-chain agreements that they're making with, the largest layer 1 protocols. And, this was work I did maybe a year and a half ago at this point, but I thought, I found they were making in the hundreds of millions of dollars, right? Like just a single deal with like, because there's all these layer 1 blockchains that are, raised literally billion, $2 billion and are just ghost chains. They literally don't, like, there's no one builds there. They have no idea what to do. So they spend their money on marketing and stuff, right? Like these type of chains, obviously they need Chainlink services. Like I think that, some of these might have paid Chainlink anywhere from like 25 to like $75 million, right? And if you stack up, 5-10 of those, that's, hundreds of millions of dollars in revenue. And that's not counting their other services. And I don't know, and that's not counting anything with like TradFi entities potentially.
We didn't talk about this, but like, and I don't know too much about the technical use case. Maybe you could tell us, though, that could take us off. But like Chainlink and MasterCard are working together. So trying to quantify how much money is Chainlink getting for a partner like MasterCard, whose market cap is what, $600 billion, is not going to be tiny, right? And in maybe a segue to that, Daniel, is to go back to this management thing. I've now listened to maybe 100 interviews with Sergey Nazarov, the co-founder and kind of the face of Chainlink. The one thing I get from a sort of, valuation of management perspective is that guy to me seems like no nonsense. Like he's not, he obviously is technically proficient and knows what everything there is to know about the two different worlds and how to bridge them. But I like my CEO to be, in a sense, ruthless, and he has that kind of quality to him. Like determined, ruthless. He's not here to play games, none of the, clown show casino games. That gives me confidence that when they're at the table, and Chainlink is at the table with MasterCard and JP Morgan and DTCC and every last major thing, that they're not talking about pennies here. Do you think do you have a different read of that? Am I over?
Same read. I mean, I've met the guy, I've talked to the guy. I 100% get that read. And then also like you hear rumblings through just crypto Twitter, right? This isn't like sources or anything, but everyone always says like, oh, like Chainlink charges a lot for their services. Like Chainlink is extractive. Like you should use this other Oracle, right? Like they know that they have the winning product. They know that they have the most secure product. They, the best product, and they charge for it. So, but once again, that's all off chain. So, I think, it's like all the necessary preconditions are there. It's just the only thing that doesn't exist is the price action, which is the most important. And, you're maybe not as an investor, but if you're watching this podcast, it's probably because you like to trade. Like the most important thing as a trader is to not fight the price action. And so you're kind of fighting the price action. If you've been buying this thing instead of just Bitcoin the past, 3 years, you've been fighting price action. So it's kind of is what it is. But I think that, right, like, I think the move here is, I think it's very clear. And if, through your own personal independent research, you spend a weekend, I think you could come to the same conclusion. I think the way to approach it though is, I think that it'll be obvious if all this, if the breakout, like if this thing does start breaking out, I don't think it's the type of thing, you short the highs, right? I think you just buy the breakout, and then maybe for the next 8 years, it pulls a Microsoft and you just ride it, right? Like whether you buy it at 10 or 20 or 25 or 50, if this thing is going to 100 or 200 or 500, like you're gonna make a lot on it anyways, right? So like I think it's clear the necessary preconditions are there for the a type of generational company. It's just a matter of it's a matter of how you want to get in. And maybe you want to be a believer and a bag holder and you just buy in now and wait. Like it's a rough life, I'll tell you. But I think probably probably the better thing to do would be wait, let the price action, let the market agree with you, right? And that's probably why there's probably a reason why all the best companies, right, like they go sideways. The pattern exists for a reason, right? And it's because there's some early product market fit, there's usually a big run up, and then the bubble pops, and like no one has the time to go deep into every company, right? And so like it fundamentally makes sense to me, right? Like the market's always right, but at the same time, right, like prices are reflexive and people are highly emotional and like to buy high and sell low. And so it makes sense to me that a lot of these companies that you point out and you're referencing their price charts since the early 2000s, like, and they had this long kind of sideways period. Like it makes sense to me that existed. And, I'm sure during those years, there are people like us that were advocates for those companies as well. So, it's going sideways right now. There's no need to rush to buy this thing. We could be kind of in for the end of the tail end or the start of a bear market in crypto, right? Like if the 4-year cycle holds, I don't know if it's going to hold. So, you don't need to rush and buy this thing. But what I will say is that, as someone that's now worked in the space for a while now, been a crypto research analyst specifically for over 2 years, like I guess my confidence in this project has only increased, and it's at its highest point today. So, and that's based on I think where the market narratives are heading as well. Just let the price action confirm it, and then just ride the wave, and I think that's probably the best move, honestly.
Yeah, I mean, maybe the last thing I have to ask you, Daniel, and then maybe Luke, you could end us with whatever where you land after hearing this back and forth. The last question I have for you, Daniel, is as an investor, I have a weak spot, which is like my avatar monkey being leaning towards risk on. I do get excited by, seeing the immense potential, and I'm usually too early. And I know this about myself, and like any good investor, you have to see yourself clearly to change and to, get better. The thing that makes me, quote unquote, more impatient than or maybe more excited than I ought to be is when I look at the governmental layer right now, the pro-crypto administration, but what everybody is, the passage of the Stablecoin Act was a shock at how quickly that happened. Them inviting Chainlink and sitting Sergey next to Trump just a couple months ago. They're back in DC again now. A bunch of stuff coming out on X talking about the last patches that need to be fixed. To me, it kind of feels relatively imminent. I don't know whether that's in 3 weeks or 3 months. Do you have any sense of how soon we actually might get that last piece of legislation? And if we get it, is it then like, okay, now we're really ready to go and BlackRock's going to announce some like insane, like, okay, we're buying blah, blah, or am I overhyping that piece of it?
No, I think, and this is coming from Sergey, right? Because like I've watched every interview as well, but his timeline is things will go live in production in 2026. 2027 will be like a kind of take stock year. What worked, what didn't, and then 2028 and beyond is kind of scaling and takeoff. But I do think that Trump, like they're kind of in a race against the midterms here. And right, like the midterms could be a catalyst or a bearish event for crypto. So like it could be as early as next year. It could be 2027 or 2028. Like it feels imminent. I think that the Clarity Act is one of the last big, which is the market structure bill. Like that's one of the last big pieces to fall. But I'm done with I'm no longer in the business of predicting timing here. But yeah, I mean, I think for me, it's, put up or shut up time. I think the next 3 years, the thesis is either validated or invalidated.
Badge, you've listened to us talk at length. What's your, how are you going to upgrade your own mental model about Chainlink as an investment?
Daniel got me actually with his comments about consensus and potentially something like Chainlink becoming the way that AI understands the world and that the reality of the world. That is quite interesting. It hadn't occurred to me. So there's a whole bunch of stuff that could be incredibly valuable. And I do want to own more Link, and I'm trying to find the right way to do that. But at the same time, like the thing that was holding me back, and I think still holds me back a little bit, is as someone who's worked in like the finance sector for one of the world's biggest banks for 25 years, and has worked in payments and has worked with Swift, like the banks still use like COBOL and they still use like ridiculous legacy technology. And so like this crypto stuff is moving at the speed of light, but like it's almost like a bad metaphor. It'd be like trying to install like a Ferrari engine into a horse-drawn carriage, and it might look beautiful, but it ain't going to work very well. So the finance sector is very slow to adopt this stuff properly. And the insights from that conference are interesting. And if things like Link can plug into Swift to kind of augment what's already there, it's very easy for the banks to adopt it. So that's going to make stuff move fast. But then you still have the regulation, which is like horrific. And, good comments, Christoph, about the Trump administration like fast tracking some of this stuff and being behind it. But at the end of the day, they don't tell the banks how to operate. And they don't, well, maybe they do to some extent, immorally, but they don't really set the laws that the banks have to operate to. So, I think it's going to be a slow journey to adoption. But I'm more of a bull on Link than I was like an hour and 15 minutes ago.
Any last thoughts, Daniel?
No big last thoughts. I think, I think these discussions are interesting, right? And thinking about like yourself as an investor versus a trader, what are your individual goals? Like really, like it's not a meme. Like all that stuff really does affect how you should invest and everything. And I think with Link, like, I think my biggest takeaway is, I think let the price action confirm the thesis. And once that happens, hopefully you've done enough research where you have the conviction to really size that bet. Because, if you put in a negligible amount of your portfolio in now and you're like, I'm a believer, right? And then it takes off and like, you don't make that much, right? Probably make a lot more letting the market confirm this thesis and then really sizing it. And so I think, you got time here. but yeah, especially given kind of the macro dynamics and Bitcoin, right? Like there's a lot of time here. So, start following it, do your own research. But yeah, I think when the time comes, I do think it'll be quite obvious. And when like these types of events, like these multiple kind of expansion events, these repricing events, I think that's when you make the most money in markets, right? And like the most obvious example is Nvidia, right? That was already a massive company that 10x'd in market cap, to obviously, right, because of this one catalyst. Yeah, if you sized into that, like you'd probably be retired. So I think that's I think that's the important takeaway here is I think, I'm in the weeds all day here and in crypto, and I really think this is the one with the best bet. But doesn't mean you have to buy and hold from here. So I think that's probably the biggest takeaway. Let the market confirm it first. But when you are seeing that confirmation, don't get scared. I think that's the time to really size in, and hopefully you've built up your conviction enough to size in when if and when that that catalyst occurs.
I think that was your conclusion last year as well. So it's actually good that you're still consistent on that. If we get you back on this time next year, is that the episode where you're going to finish by saying, "Shut up, guys, just buy it now, buy now"?
I hope, but yeah, let's make it a yearly thing, and yeah, at least for the next 3 years, I'll sign up right now. So just tell me where to sign. I'll be on December 2026, 7 and 8.
Daniel, where can our listeners and YouTube Jungle Beasties find you most easily?
Yep. So you can find me on Twitter at @_DShap, DSHAP.
Thank you so much again for your time. This has been a true pleasure.
Yeah, always a blast. Always a blast. Thank you, guys.
Thank you. Good to catch up. And have a great Christmas and New Year.
Happy holidays.
That was a cool discussion, Christoph. I'm sorry, I'm trying to be a bear about this stuff because I'm trying to kind of hold you back a little bit and keep us grounded. But this is exciting stuff, right? And, this guy is clearly an expert. And what did he say in the closing minute there? Like, this is his favorite opportunity in the whole world of crypto right now. So, you got to put a lot of stock in that.
Yeah, and and to my point a little bit, I think in terms of principles, I think hearing myself say what my weak spot as an investor is, getting too excited about, I've done this over and over and over again. I see the potential, I see things happening, but in the real world, things just take longer than you think. Though that is sometimes balanced by the market always being forward-looking. So there is, that case to be made. But in this moment, I think Chainlink is my number 4 in the King of the Jungle portfolio. I just got to 100 tokens. To me, it's a nice symbolic, round number. I'll put it to you this blankly, Badge. In all of, call it the markets, I don't even like the word crypto anymore, given that Chainlink is sort of bridging worlds. I don't think I've ever come across a more asymmetric bet than this one, based on, call it what I understand the fundamentals to be. Now it is a question of, as Daniel was saying, you'll know if things are legitimately playing out because the price will tell you. And
that's nice that you've got you've got a bit of control, because if it's like your most asymmetric bet, like the Christoph I know will be 100% all in this alone, nothing else. So at least you got some diversification. Well played.
Yeah, there's a little hope for me, maybe. But that's in part because I'm not, I can't sell my EOS because that's not, So regardless, we hope it was educational, and it's a fascinating space to watch anyway, because it involves updating the entire world's global infrastructure. That's not a weekend project, someone does in your garage. The only one additional point, I don't know if I'm not sure this is an error on your end or it's implied by what you said. You know, when you were talking about the way old Swift used to work, run on Cobalt and all these rails, Chainlink runtime environment is the new rail, and the big boys are already in production on that. So to your point, it's just a question of how fast can it work.
Maybe I misspoke. Swift got modernized like a bunch of years ago and it's still being improved, but the banks still have like essential services running on COBOL. And so you reflect on that like ludicrous dependency on like 50-year-old technology, how quickly they really going to adopt some fancy new thing beyond some little niche.
And you know what? And maybe the takeaway for me from an investment standpoint is hearing our conversation. To me, it's obvious the value proposition. It's what we started with. When you tell any bank in the world or any financial system, like you can make more money, you could do it faster, you could reach more clients, and we're going to make it as easy for you as possible, easier than you thought. There's no money manager. You would have to be almost like oppositionally dug in out of some kind of like...
No. You're wrong. I agree with you from a business perspective, but at the same time, if you're the guy running like the book or, running like transactions for your customers, not only have you got like reputational risk if something goes wrong, what if you breach your financial crime obligations and inadvertently you facilitate like money laundering or sanctioned payments? You lose your banking license, like you're out, right? There's very good reasons why the banks are super slow and conservative to adopt new technology.
Right, which also actually Chainlink started with security first. They hired the world's best cryptographers to make sure the one thing we're not going to fault on is our security protocols, and to this day has 100% track record. So you're right, to your point, we know how important that is. So anyway, a fascinating thing to continue to follow and learn about. Also, and for the end consumer, when this starts happening, it's kind of wild. You'll be able to sort of go to your own bank. I mean, literally, like you'll open an app, stake your collateral, and out the other end, you'll have money with no bank teller, no Wells Fargo, no nothing. And it's kind of like mind-blowing what that will do for anybody, especially for people that have never had access to kind of instant capital. But that's for
Save it for next year's episode with Dan Deshat. Yeah. Hey, before we break though, there's a whole bunch of exciting stuff we want to talk about. So I'm sorry if you're on the YouTubes and not in the Patreon community, but when you hear this, we already had our Christmas party. I can almost feel like the hangover that we are going to both incur this Friday on the Patreon exclusive live stream. I feel it coming back in time and like impacting me now. And I've got a couple of gifts over there as yet unopened. I will have opened them by the time this goes out, and I can feel something sloshing around in at least one of them. So I think you got some spectacular booze for me to consume. But so you missed that. But what you didn't miss is we have our community portfolio month 2 for December. Our Patreon community are nominating, or they have nominated 9 really interesting investment opportunities. And now within the Patreon, we're voting. We're right in the middle of voting right now. There's a clear leader. I'm not going to say who that is, but it is a Patreon favorite. And I think in about 10 days time, we're going to close the voting. And then Christoph, you're going to buy real money, $100 of your real money in whatever our Patreons pick for their community portfolio. We've got some really good quality, like one-pager pictures now. So if you want to check them out, go swing by wallstreetwildlife.com, which is our Patreon. If you want to hear about Twist Biosciences, AST Space Mobile, Zscaler, Jumia, Harrow, Alster, Solaris Energy Infrastructure, IREN, or Roku, our community have put together a one-pager on each of those between them. So check it out if you're interested.
Yeah, it's why our community is just kicking all kinds of ass. We're investing together and we're sharing info. And so if you happen to be a relatively random person, just finding us on the YouTubes, Badger and Monkey always say that you become a better investor when you do it with a group of people who are working together to share their experience, their mistakes, their successes, and now their intelligence and research. And so it just goes so much better for everybody. So hop on over to patreon.com/Wall Street Wildlife, where you can become a
beast of an investor.
A reminder that the people on this program may hold positions in the companies that are mentioned. Buying and selling stock carries financial risk, which could include loss of capital. The views in this program should not be taken as personalized advice. Before acting on any of the information provided, listeners are encouraged to consult a financial or tax professional.